Welcome to Wall Street Confidential, talking about the New York Stock Exchange spreading its wings, not overseas, here domestically, with the American Stock Exchange. Is this a good move, Jim Cramer?
Yeah, first of all, I think that the building is worth $200 million, so they go buy
Good real estate.
AMEX has the ETF listings, which are really the best listings in town because it's growing. So now the New York Stock Exchange has a hammerlock on the ETF. It also has options, and everyone's been saying the New York Stock Exchange should have options exposure. It does not have clearing, which makes it so it's not as good as CME, but it's never been as good as CME, and it's never been priced as high as CME. Now, obviously, because we're in a bear market, people will say, well, the transactions are going to go down. You don't want to own the NYX.
Right.
And that's a compelling case against NYX. I just feel like that the growth pattern's pretty clear. It's not an American, I don't think there's a worldwide recession. You're going to see that the vast majority of the earnings are going to come from Europe. So the idea that this thing should be going down the way it is it doesn't make a lot of sense. But it has been a very bad stock. And I think that's because people wanted to sell it like 15 times earnings and then put a $4 number on it, which would obviously take it to 60, which is where it has historically seemed to want to go, even though it traded at 94 a few weeks ago. I always struggle over a position like NYX. It doesn't have yield support. It doesn't have buyback support. But it has great growth possibilities. And there aren't that many 25 to 30% growers out there. So I cling to them. But this is a very hard stock to own, but this was a very smart move. They can get rid of almost everybody. They don't have to have anybody. Amex had no technology. They just had the listings, and they have other... you're in one fell swoop, you're able to add a lot of names into the system. I continue to think that Duncan Niederauer is doing everything right. Okay. I continue to think that the stock acts as if people want it lower.
All right. There was like a very seamless transaction there when John Thain left and Niederauer came in. It was
it's great. Thain's good and Duncan's good, and Thain I think is going to try to turn around Merle. I think it's a multi-year turn. I think that Duncan recognizes that you just have to run the business and eventually you'll get a price-to-earnings multiple. But right now, his price-to-earnings multiple is dramatically lower than the others, and I think people feel that the estimates are too high. Jefferies came out this morning with a price target cut. Seemed pretty gratuitous. It remains one of the most hated stocks I've ever seen.
But this deal, thumbs up.
Oh, yeah, there's no way to criticize it. This is the only natural buyer, and it makes a huge amount of sense. And again, New York real estate is extraordinarily hot, and that has not changed yet.
Okay, thanks a lot, Jim Cramer. Wall Street Confidential, stay tuned for more.